Let's bring in Joe Balestrino. Joe is a fixed income strategist with Federated Investors. And Joe, welcome to you. Interested for your take on the results of this 3-year auction.
Yeah, hi, Lori. Good to be here again. It was pretty good news. Yeah, it was a smidgen less than the last one, but good indirect bidding. The U.S. has kind of changed hands here. We were the economic mess, or we started the mess, and now things are working pretty well, and our paper's still in demand, and the currency market's certainly showing that.
Is that surprising to you that we are still so much in demand? Again, I was just talking with Dom about concerns about our unprecedented, this massive federal budget deficit that we've got.
Yeah, that's the negative side of the equation. The positive side is the economy starting to move again. Now even to maybe include the consumer that we've been waiting for a long time. The business side's in real good shape. The earnings side is in real good shape. Flows into our markets are doing well from overseas. So we're back on track, and the currency markets it's relative to the developed world, i.e. Europe, where there's some real issues economically and financially. We look like a much safer haven, and that's a good place to be.
But it's a safer bet, right, that the front end of the curve is a better bet right now than the longer dated maturities?
Yeah, I could go either way. In fact, what
Really?
we're doing here is we're starting to barbell and avoid the middle part of the curve. You know, the short end can't get beat up too bad when rates go up, and they will go up. They'll keep going up this year. The long end, we don't think is in too much danger because of the word inflation. Inflation doesn't seem to be here, at least from a typical business cycle perspective. The Fed keeps telling us with all this slack, they're not anticipating much in inflation.
Yet there are, we're going to get the meeting minutes, the FOMC. This is such a tongue twister for me, the FOMC meeting minutes at 2 p.m. Eastern, of course. And this one is taking on extra special importance, wouldn't you say? Because we know, well, Thomas Honig of Kansas City, the Fed bank chief there, has already dissented. He's urging other policymakers to become more hawkish. Do you think more people will join Honig's bandwagon here?
I think yes. You'll have a number of things come out in the minutes today. Certainly the dissenting vote and others leaning that way. I think we'll also read about the exit strategy or some semblance of it, i.e. the sequence. Do you raise rates first, or do you start selling assets that you've purchased? And all of that will become much more clear over the next couple of meetings. But we'll see some of that in the meeting minutes today. It's a Fed that's very divided.
All right. Hey, Joe Balestrino, Federated Investors. It's great to have you on. It's going to be a busy week for the auctions, that's for sure. So we'll see how it all sorts out. Joe Balestrino, Federated. Thanks again.